Ethics and Equity in Algorithmic Trading. How Quantelligent stands apart. In today's markets, algorithms quietly dominate the trading landscape. In fact, over 70% of all U.S. stock trades are now executed by algorithms. These systems operate with precision, speed, and logic, often outperforming human decision-making by removing emotion and bias from the equation. But this dominance hasn't come without controversy. From flash crashes to unfair advantages for large institutions, algorithmic trading has drawn serious criticism. It's no surprise that many investors, especially those in the middle class, are left wondering, can algorithmic investing be both profitable and principled? At LymanWealth, we believe the answer is yes, and we've built our Quantelligent strategy to prove it. The dark side of algorithmic trading. High-frequency trading is the practice of using extremely fast computers to execute thousands of trades in fractions of a second. These systems exploit tiny, short-lived inefficiencies in the market, often beating slower traders, including retail investors, to the punch. One of the most controversial tactics in high-frequency trading is front-running. This is when a trading system detects that a large trade is about to occur, then jumps ahead of it, buying or selling before the larger trade moves the market. It's legal under current regulations, but many consider it exploitative. High-frequency trading also played a key role in the infamous 2010 flash crash, when the Dow Jones plunged nearly 1,000 points in minutes, only to bounce back shortly after. Algorithmic feedback loops and lack of safeguards created a cascade of irrational selling, highlighting just how dangerous these systems can be when unchecked. Another issue of algorithmic trading is lack of transparency. Most algorithmic systems used by hedge funds and major institutions operate as black boxes. Investors hand over their money without understanding how or why the system trades. This opacity makes it difficult to assess risk, especially in volatile markets. And what about institutional firewalls? Usually, the best performing strategies are typically reserved for institutional investors, large organizations like banks, endowments, and hedge funds. These institutions operate behind what we call institutional firewalls, exclusive access, insider pricing, and tools that retail investors simply can't use. As a result, individual investors are left with either DIY tools that lack sophistication or robo-advisors that mimic index investing without adding much value or protection. Enter Quantelligent, a transparent, ethical alternative strategy. LymanWealth built the Quantelligent strategy to challenge the norm. Our mission is to deliver powerful, rules-based investing with the kind of transparency, control, and ethics that many systems ignore. Let's highlight how Quantelligent investing is different. Quantelligent does not use high-frequency trading or keep the technical details of how orders are routed, priced, and matched behind the scenes. Instead, we trade just once per day using algorithmic logic, rooted in market behavior, not speed. Our system doesn't front-run or scalp tiny profits from latency, or chase trades based on milliseconds. Instead, we believe in full transparency in strategy design. Quantelligent follows a clear, rules-based system built around 4 core pillars. Number 1, daily dollar cost averaging. We invest in small, consistent increments to reduce timing risk and smooth out market volatility. Number 2, value averaging. We sell into strength, automatically trimming profits when the portfolio rises above target levels. Number 3, profit captures and resetting. When your total investment reaches a defined gain, we sell the entire position, lock in the profit, and restart the process, protecting your gains. And number 4, reinvestment of realized gains. Those profits can be withdrawn to supplement income or reinvested to compound long-term growth. Each of those steps is visible and explainable to the investor. There are no secrets, just sound logic and historical rigor. And keep in mind, we don't just chase returns. We manage risk intelligently. For example, our strategy limits exposure to large drawdowns by selling excess gains and resetting risk levels regularly. And by participating daily, we spread out entry points, avoiding the all-in timing risks of lump sum investing. Also, the system avoids emotional trading by following clear, unemotional rules that react to price, not panic. This kind of risk control is central to making algorithmic investing not just effective, but reliable. And on top of all that, LymanWealth has made their Quantelligent strategy accessible to real investors. Most algorithmic systems require accredited investor status or millions in assets. But Quantelligent is different. We designed it for the middle-class investor, people with at least $25,000 to invest or a retirement account they want to put to work more intelligently. There are no secret handshakes, just smart tools built for people like you. So why do ethics matter in the age of automation? As artificial intelligence and algorithmic decision-making spread across every industry, ethics in design becomes critical. In finance especially, where the stakes are your retirement, your future, and your peace of mind, trusting your tools is non-negotiable. Quantelligent shows that it's possible to create a system that's profitable, capturing gains in both up and down markets, transparent, with every trade explainable, accessible, no hedge fund or elite status required, and ethically engineered, avoiding manipulation, promoting clarity, and prioritizing your goals. In conclusion, Quantelligent is a better way to invest, not as a get-rich-quick scheme and not as a black box, but as an engineered solution for steady, intelligent, and ethical wealth building. It's not just about numbers. It's about respecting the investor, their intelligence, their capital, and their future. If you want a system you can trust, one that grows with you, explains itself, and acts in your best interest, then invest like an engineer. Think algorithmically. Trade with integrity. Welcome to LymanWealth Quantelligent Investing. And good luck out there. It be cray-cray.